We're still in Amsterdam at Morningstar's Sustainable Investing Summit 2024, and I'm joined by Invesco's Wim Vandenhoeck. He's a senior portfolio manager in the global debt team. He just gave a really interesting talk on impact investing in emerging and frontier markets. And one number that really struck me, Wim, is that right now 90% of the money for these programs come from public institutions like the EBRD, like the World Bank. Is this asset class ever going to become palatable to other investors?
Sure. Look, and thank you for the invite to this great event. You're absolutely correct that the majority of climate adaptation funding so far in emerging markets has come from public money. As you mentioned, these DFIs, supranational institutions, have been funding these projects that are really needed right now in emerging markets to adapt to the changing climate. What we're trying to do is obviously connect this public available money with and use it to entice private capital to join the effort. Private capital, with private capital, I really mean think about insurance companies, pension plans. Eventually also, we can, when this market develops further, we can even go into kind of mutual funds for retail investors. But the goal is really to change the perception of investing in those markets. And in order to do that, in order to bring that risk-adjusted rate to a level that CIOs of these pension plans, insurance companies are willing to take, we are using these DFIs to kind of de-risk a strategy or an investment vehicle that makes it acceptable for these CIOs to then turn around to their board, like, hey, here is an investment pool, a pool of projects investing in Africa or in least developed countries that maybe has an average of a lower rated average grade credit rating. However, with the de-risking, this becomes kind of an investment grade vehicle for you to invest and have an impact.
And these de-risking efforts, way to structure risk, is this tracking? Are you seeing increased interest from institutionals?
Yeah, absolutely. I think the journey probably started about 4 or 5 years ago. We've seen a couple deals in the markets. Some of them are public, others are not. But to be frank, and I only encourage this, our competition is also looking at these things, right? And so what you have seen now that global banks are actually joining the effort in structuring these deals is a pickup in coverage, right? So think about some of these deals that were only covered by 1 or 2 global banks 2 or 3 years ago are now covered by 5 or 6 of them. And so what that does is it attracts liquidity to that market. And instead of having these just umbrella deals, that we call them private placements, that are public debt, however, they're only looked at by a couple institutional investors. What that does is really push that private debt into more public bonds, as we usually buy in these mutual funds, right? And the liquidity picks up for that. Sorry.
Speaking of that particular risk, especially in frontier markets, right? There is enormous investment from China. There's an increased presence by Russia in many frontier markets. Is this factoring into your work to get private money into these markets?
Yeah, look, absolutely. In our analysis, obviously, we have to look at all the risks involved, not just on the ground, but also the geopolitical risks, right? Now, we do take a longer-term view. A lot of deals are fairly transactional. We do our regular, and luckily I'm backed up by an entire group of about 55 credit analysts who help me with looking at the various credit angles, and we do the analysis just like we do any other analysis in public markets, right? So it's very much part of a normal process that is, I would say, enhanced with the adaptation angle, where we can compare various projects according to a framework, but the basis of the process remains the same. Risk is risk, and that needs to be evaluated and obviously needs to be compensated as well.
Well, I hope you succeed with that. Thank you, Wim Vandenhoeck, for these insights. For Morningstar, I'm Lucas Strobel.